All right. We'll get this going here. Got the big mic on. Make sure I got my sound on like I didn't before. All right, guys, say hi for just a second, guys.
I quit my job at the helium gas factory yesterday. I refuse to be spoken to in that tone.
All right.
All right, the audio is working. We're better off than what we were the last time. Now I just got to get my push to talk button squared away because I changed them up and I'll probably forget.
Hang on, Bonavest. I'm just going to invite Clyde in here and shake things up a little.
And as we go through some of these questions, feel free to chime in, guys. Some of these questions, I have a feeling they're going to be asked about the different exchanges like Kraken and places like that. And to be honest, I haven't traded any of the cryptocurrencies on margin or leverage, so I haven't even seen the interfaces to these exchanges. So there's probably going to be some questions about that. Feel free to chime in to help out because I won't have firsthand knowledge about that. Mainly, I just wanted to kind of go over that little spreadsheet. I paste a link, and I'll make sure I put the link in the description of the YouTube channel here in just a second. And essentially, yeah, take a look at that spreadsheet as we go through the video. Follow along if you're watching this after the live presentation. And hey, let's take a look at it, see what we can figure out here.
Appreciate your time, Bonavest.
Yeah, Bonavest. It's nice to you.
+1.
Can I ask you something general before we start?
Yeah, go ahead.
What was it that made you prefer to track this in dollar value rather than BTC value, considering the price fluctuates, like BTC price fluctuates so significantly?
Yep. So one of the things is that when you're working with pairs, so like in Forex is where I grabbed this sheet from, but same thing in cryptocurrencies, it's usually something and something. So you got BTC USD, LTC USD, everything is with USD, made it nice and easy because of dollars and cents. What I need to figure out is exactly what you said. So there's some pairs that might be, like ETH versus BTC, or I don't know, some other combination versus BTC. And in those cases, I need to figure out and change some calculations so that if you choose one of those pairs, that it'll change up the way it shows all the different numbers. So just to put something together, I put this together like maybe in an hour or so. I just converted everything from Forex to using dollar amounts. So that'll be the first step. This sheet, if you download it, you'll see in the upper right corner it says version number. If I change the version number on my sheet, what it'll do is next to the title at the top, there's a little bit of formula there that'll actually pop up saying update available. And then all you got to do is click on the current link in the upper right, and it'll take you back to the same link that we shared out, and you just get the newest version, and it'll be like version number 2 or whatever. So that way, as I add stuff to this sheet, or if other people have recommendations of what to add, as I update it, all you got to do is click on the link, get the newest version, and save it as a copy of yours. That makes sense?
Yeah. It does indeed.
As we go through this, I'm always checking to make sure my mic's working. I'm pushing the right button and all that stuff. So anyway, yeah. Let's look at the 3 tabs real quick, and we'll just get rid of the 2 easy ones. So the profit and loss tab, that's just something I threw in there. You can type in a balance or something, and I'm still messing with it, but essentially it's just good to keep track. And just as the example, just for some of you guys that are starting out that are still new, if you look in the red and green areas where it has the profits and losses, you can look at these percentages, and let's just say this is by the day, 2%, 2%, 3%. the little percentages will actually add up, and over a period of time, if you can maintain, you know, a relatively positive rate of return with 2% or 1% every day, it'll add up. You'll double your account in a matter of a few days. You know, in this case here, you're looking at like about 30 days. You know, so small percentages are good. On the Outlook tab, this is just the Hopium profits outlook. So if you wanted to type in your balance, give it a flat percent of say, let's say 1.5% a day, you can see that after 30 days of trading, you'll end up with $7,800 and somewhere around maybe 55% profit. Woohoo! Smoke the Hopium. But the main reason why I put this thing together was the risk and reward for how to trade on margin and leverage. What are some I guess main questions you have about the this page here? What are we looking at? Anyone got some questions? Explaining any of the terminology here.
ATR is what?
ATR is your average true range. So that's pretty much like the height of a candle over a period of however many periods you have set up in the ATR. And the reason why that's there is so that when you type that number in, you're saying that if the ATR is $55, you kind of want to base your profits and maybe your stop losses based on that number. So that if it moves like two candles away and it goes $110, you know that, hey, it went the wrong way. You're in a bad position. Go ahead and get out. And that's why I put a little stop loss there with the 2 times, just because that's a round figure to go by. So if your ATR is 55, type in 110 for your stop loss.
Okay.
Limit, someone was asking earlier before we started the stream, limit is actually like your take profit. And there's a couple of different multiplying factors from the ATR. Same kind of theory behind that. You know, if the candle is ranging $55 a candle, then maybe you want to do like 2.5 times or 3 times whatever the ATR is, and that's where you want to take your profit at. So if you type that in, let's say we wanted to go with the 3 times, that'd be 165. And essentially, what the little description under the title there is this sheet is for maximum position sizing based on balance and leverage. So what the position size that this thing is telling you in green, this is telling you the largest position you should take on. Doesn't necessarily mean you should always take that position. It just says that's the largest you should ever take based on your balance, the leverage, and I guess I need to change that, this risk percentage. So when you're trading on leverage, you want to know ahead of time what is the percentage of risk you want to take on. And in this case, I put in there 3%. So every trade, I'm just saying I don't want to lose more than 3% if I mess up. And 3% of 5,000 is 150 bucks. And all of that gets taken into account to come up with a 1.36 BTC based on my leverage of 5. And let's do some math here. Let's try to make these numbers round. We can go through a quick example here. All right, this is going to get challenging with me pushing the button here. So what we're looking at is we got $5,000 balance. I only want to risk 3%, which is a very small portion of my entire balance. Because if you go wrong and you're risking 10% every time you're wrong, you only have to go wrong a few times and you're already half of what you used to have, right? So use a small percentage of risk, 3%, 150 bucks. If the true range of a candle is 50, and I'm only wanting to risk 150, if I have 1 Bitcoin, how far away, how many dollars does the price have to move before I'm out? If I have 1 Bitcoin. 1 Bitcoin, I'm willing to lose 150 bucks. And the candles move $50 a candle. How far does the price have to move before I'm finally out? Anyone? Crickets?
I just came back.
Isn't maybe nobody watching? Maybe that's the problem.
No, we're here.
Sorry, I was busy typing there, so I didn't quite.
Okay,
hear
I
the
didn't know there was a
question.
YouTube video.
Yeah. So, Okay, I'll talk to the people that actually. Chris is the only person that said anything. So yeah, go with your second answer, Chris. 150. So if I have one Bitcoin and I only want to risk $150, how far does the price of Bitcoin have to move before I'm out? $150. It's one Bitcoin moves $150 against me. I lose $150. That's what I wanted to risk. I'm out. Makes sense, right? So then the question is, well, what happens when you're doing like 2 times the leverage? Because you're using a broker where they're willing to allow you to trade with twice as much Bitcoin that you could possibly get with your actual cash, right?
That's $75, right?
Right. So what it actually does is, based on your leverage, you're actually holding on to more Bitcoin. So yeah, the price that the Bitcoin can move gets halved. So if it was 150, now it's 75, because if I have 2 Bitcoin, I can only risk $150 loss. If I have 2 Bitcoin, the price can only move $75 and I'm already out $150. So if you start looking at that, the more Bitcoin you have, obviously, the smaller moves that you're worried about. Hence why when you hear about people in the chat talking about their own margin, and they're like so worried on the 5-minute that it's, you know, shooting up or shooting down. And if anybody is talking about being worried about stuff like that with those small price movements, it's because they're trading with way too much Bitcoin than they should. They're using that 5x leverage, and they've used every bit of it, and they only have like a sliver of a few dollars left to cover any losses that they have.
Yeah, and people trying to catch like 50% of their margin on a single move.
So your stop is effectively under a negative multiplier by your leverage. So if you're on 10x leverage, then it's like your stop should be 10 times shorter than what your initial stop was at 1x.
Yeah, so the more you're trading with, the more leverage, the smaller you're with their extra money that's left available to you, the less you have available for your every little move, right? So what this is doing, like I said, this is going to size that position for the maximum. It's going to use every bit that you can possibly use, so that if you did lose it, and this is with a market that's not going nuts, right? Because we all know in crypto that when stuff goes nuts, the exchange locks up, you can't place any orders, you get slippage because your order was here, but the price moves so quick that it didn't catch it right at the number that you had. You know, all kinds of things can happen. So you want to leave yourself some leeway. This is a little dangerous because the calculation is to give you the maximum just so that you don't go over, right? So let's put up an example of where, like right now, you'll notice it says margin required. So right now, to hold at 2% risk with 1x leverage, right, a 0.56 BTC, it means that I need $4,800 at the current price of Bitcoin. So that I only have 5,000. So if I hold 0.56 BTC, that's using pretty much all of my balance except for the $100 that I want to risk, right? This is how this spreadsheet calculates stuff up. So if you want to leave yourself some room, make sure you size those positions a little smaller. I think the best way you could probably do that is just increase your risk. So if you want to at risk or whatever, you type in a bigger number, you'll notice that I'm already at max at 5.6. As I increase my risk, it'll actually lower my position size. So it was 0.56, now it's 0.52. And the reason why is because...
And what did you recommend in terms of the stop losses? Would you obviously market stops, not limit stops, just for slippage avoidance, or how do you usually go about trading your margin?
Yeah, sorry, I'm hitting the wrong button again. But yeah, the slippage, if you want to just account for that, just leave yourself some room. You'll have to come up with that on your own as far as, you know, how much do you want to leave room. I might add a field in there that maybe you want to type in a dollar amount that you want to save, you know, as that extra margin of error or whatever. That way it won't account for that in your adjusted balance. But yeah, the way I was explaining when I wasn't putting the push to talk was that if you increase your risk amount, I increased it to 10%, and you'll notice that the position size went from 0.56 to 0.52. And the reason why is because of that risk amount, it's not including that with your available margin required. So it's saying, oh, you can't get as much BTC with the amount of money you have left other than the risk amount. So that's one way you can do it if you want to lower and reserve a little bit more money. Just increase your risk amount to the point where the position size goes down. and that's going to leave you that little extra bit of money off to the side.
Okay, cool. That makes sense. Yeah, thanks.
So once again, there's the 2% risk, and it says 0.56. But if I increase it, it goes down to 0.52.
You're just leaving a little bit extra room for yourself for that possible slippage.
Yep. And at 10%, it goes down to 5.2. So there's a little example there. Other than that, down at the bottom, based on whatever dollar amount you put in your limit or your take profit amount, it'll tell you exactly how much profit you'll have based on your position size. And then it'll also tell you it's a percent in profit on your balance, and also the percent of profit on your margin, which right now with the way the numbers are working, your margin is your balance, because we're trying to use pretty much all of it.
Is there any other reason why you separated the two there, or is that just for clarity? Is there any impact?
Not right now. I think there will be when I decide to convert it to Bitcoin. I think there's going to be, and you'll see some small differences. Like if I increase my risk and it doesn't use that risk dollars. So let me change that here. Maybe not, because the way it's calculating, like I said, this was made for Forex, and it works a little different on margin. So there may not be a difference right now, but I'm gonna leave it in there because I have a feeling when I do the Bitcoin thing, I think there's gonna be some differences there. But that's just purely for your information to let you know, if you complete this trade and you make $60, what percentage of profit is it on your actual balance? And to me, that's very important. I could care less about how many dollars the Bitcoin went up or down. I just want to know what's the percent profit on my account balance. So now, anyone got questions about just in general trading on leverage and margin, or questions about on the exchanges, things like that? So I'll go with a question from YouTube real quick.
With that on Finex, right?
Sorry, say your question again.
I should be able to play around with that on Finex. I don't need a BitMEX account or anything.
Yeah, on Bitfinex, they do leverage as well.
Yeah, I think I saw something like that.
Yeah, and different exchanges will treat leverage trading differently. Kraken and Bitfinex, you can go to their websites and they have a couple of pages that describe how they do their different leverage trading. I think those two actually do things differently between the two, but essentially they're effectively the same. So you can use the sheet for either one.
Mm-hmm.
Slick Rick had a quick question, and this is like a basic trading margin leverage is, I don't understand. So do you lose your if you lose your trade, do you lose all the 0.52 BTC or whatever that position size is? So no, you don't lose what your position size is. What you will lose though is whatever the dollar amount is in the risk amount is potential. You could lose all of that. So in this case here, if it's a $100 stop loss and it's a 0.4 BTC, when it moves $100, the most I'm gonna lose is whatever is the remaining portion, the open-ended portion. Let me try to get a nice round number here. All right, so right here I've got $5,000. I want a 2% risk with $100. Now this is very exaggerated because if I have one Bitcoin and I only want to risk $100, the price only has to move like very little for me to get stopped out. But in this case here, essentially what I'm going to lose is that $100. When it moves $100, I'm going to lose the $100 against me, and it's going to get me out. I'm still going to have the value of that one Bitcoin, because why? It's going to sell that one Bitcoin for whatever the price is, $100 less than what it was when I opened the position. So no, the only thing you're wanting to risk, and that's the whole point of this, is that you want to make sure you know how much money you're risking by opening this position. You don't want to risk all of your money. You don't want to lose all your coins, right, just because you made a bad move. So you want to make sure you set your stop loss, whether you're able to actually put it into the interface or you just have it in your head saying, hey, when it hits this price, I got to get out. It's too much for me.
Right.
Can you talk a little bit about maybe a situation where you've used high amounts of leverage? Because I know it's infrequent that you're going to be using very high leverage in a trade. So I am curious about situations where people have decided to use high leverage. Like,
Well,
do you have
I use
maybe an example or?
yeah, I use the 5x only because I heard Kraken in the US offers up to 5x. And so if you put 5x in here, hold on just a second. Is that if you use 5x and I open up this one BTC trade and my little sheet says, oh, $100, 2% risk is all I want to risk. If you don't put anything in your order, you know, on the interface or whatever to like get you out when it moves $100, if you don't do that, what'll end up happening is that, and that's why it's different from Forex to the way most of the cryptocurrency places work margin leverage is, it'll let you just keep losing money. So with this one Bitcoin, it could go, if Bitcoin drops $1,000, how much money have I lost if I just close it out? $1,000. Because what it does is it holds all of your losses and profits until you close your position. So if I take and buy this one BTC for $8,500, I'm essentially utilizing that full $5,000 balance for any losses. So literally, if I didn't touch it and it went against me for $5,000, it went down $5,000, that one BTC, it would cash me out and I would have zero. It just closed me out. Now, I think there's some, most of the exchanges are set up to where when it gets to a certain percentage, it gets you out ahead of time because of slippage. It wants to make sure it doesn't, you don't owe any money and they don't owe you any money, right? So they'll close you out. But you never want to trust that because big market moves, things won't work out like that. So just know that when you open up a trade and you don't put a stop loss, you're risking your whole balance. This sheet is just for either mental or for you to type into the interface, this is when I want to sell. So just know that the whole balance is at risk until you close out. And this would be the problem with what you're kind of to your question was that people that aren't looking at numbers like this to decide how much can I really risk? How much am I willing to lose? And what they'll do is they'll go for high leverage, not realizing that when that one candle takes a dump for like, you know, $1,000 against them and they didn't see that coming, now they're half of their balance is gone. Because on one BTC, if it drops $1,000, I've literally lost 20% of my balance of the $5,000. And if I didn't have an order in there to get me out, now I'm sitting there holding it going, gee, should I close now or wait for it to go back up? And it's just not the position to be in.
Yeah, and I guess it also helps quite a bit when, you know, to prevent FOMO and let's just stretch this a little bit longer or a little bit shorter or whatever, just to get you out, stick to your risk management.
Yeah, you can play around with some of these numbers on your copies of the spreadsheet and kind of just adjust them, see how that position size changes. Sometimes you'll notice as you risk more money, the position size goes down. That's kind of like what we were talking about. It kind of sets aside your risk amount, and therefore it won't use it to be able, because you don't have that available to be able to buy the Bitcoin. That'll help keep you from getting to the point where if you type in that risk amount, it won't get you to the point where you're going to go beyond that. You know, on accident. You're going to be aware of the fact that I'm getting an amount of BTC that only leaves me the amount of risk. If everything was nice and smooth on the exchange and there's no real big drastic drops and stuff, you literally could just open up the thing and go for broke, because the exchange is going to get you out at about the time you have a zero balance. And if you're using pretty much the maximum position, that's all you're going to have. So it'll get you out automatically, but I don't trust that. I mean, you want to leave yourself some room and get out on your terms.
Yeah, no, definitely. Thanks.
Let's see. Gaz was asking about are you adjusting your stop loss if the market keeps going up? That's a valid strategy. I mean, that's just a typical trading strategy, moving stop losses. If you say you want to get out when it gets to this level, it goes up, you're in profit, maybe you move that stop loss up so that it helps secure profits. That's just a basic trading strategy and works fine with leverage just like anything else. Someone was asking about time frames. What time frame should you use on leverage? It really doesn't matter whether you're trading on any time frame. All these same principles for trading on margin and leverage, they're all the same. What will change is your ATR, because obviously on the smaller time frames, each candle will only move so much. So you'll notice on the smaller time frames, your ATR will be smaller. And so you'll be looking for less profits and less losses, right? The dollar amounts will get smaller. Libertarian saying he uses 25x all the time. I usually lose my balance less than 48 hours. So here's the thing, and this happens in Forex as well, is you can avoid that, because if you go to the 25x, what I'm going to guess is happening, and Libertarian, correct me if I'm wrong, you're using 25x, and the amount of money left over after you hold a position of whatever 25x is, whatever little amount of money is left is not giving you enough room that when the position goes against you, that you're still in it. Because obviously you're not going to nail the perfect position all the time. A valid strategy that I've found for me, that I've been using, testing out with Bitcoin, that worked in Forex for me, was whatever the ATR is, I give my stop loss twice the ATR. And that is because a lot of times I get in early and the price will go against me, maybe $50, like in this case here that's on the screen, $50. And it'll go against me $50, but if I put a stop loss of 100, it doesn't usually go twice. And over time, when I say, oh, let's see, what if I bought here, what would happen? Oh, if I sold here, what would happen? And over time, I've noticed that if I do 2 times the ATR, my system and the way I pick my entries, I usually don't mess it up by twice the ATR. So I put the twice the ATR, that way it may go against me, but it'll keep me in the trade for when it goes the direction I wanted it to go in. So you got to give yourself some room. If you're busting your account like that all the time, it's probably because your position sizes are too big and you're not leaving yourself enough room for it to go up and down against you. Yeah, and just because this spreadsheet here gives you the maximum position size doesn't mean you should use the maximum all the time. In fact, you'll probably find yourself doing better if you take a little bit smaller position size to test this out, see where you come out with. So if you do like half, like you set your risk percentage and then use half of that position size and try it out, see how that works for you, see what kind of differences there are with the way it affects your balance and how much room is available when it goes against you. So you can kind of understand and realize, oh wow, I got a lot of room. This thing would have to drop like $4,000 for it to drop me out, and it's definitely not going to drop $4,000 before it goes up the $1,000 that I'm looking to profit from. And that's kind of a trading style to say, when you enter in at this price, you're kind of putting a statistical kind of decision of, is it going to go up before it goes down? If I'm trying to take profit up here, will it make that price before it hits my stop price down below? If you go in that with that mentality or whatever, and you leave yourself enough room, you'll get your strategy down to the point where, yeah, you're going to be winning more than losing. Feel free to chuck in any questions either in the chat or on the mic. You guys have open mic, so feel free to talk. All right, doesn't seem to be that many questions. So I guess this was easy.
Huh?
Yeah,
That's
well,
something to chew for.
Yeah, cheers. Thanks again for your time.
Yes.
Excellent little spreadsheet, and it's quite self-explanatory, but it's nice to hear you talk through it. So much appreciated.
Yeah, not a problem. All right, guys. Well, that was a quick and easy live stream.
Thanks.
thank you for the information, man.
Hey, no problem. We'll catch y'all in the WhalePool dojo. See ya.
Yup.